Folks, you better get ready. In today's video, we're going to break down the latest on the market and plays, including one of our favorite plays that just got a major DOD deal. And then we're going to go on to one stock that I believe is absolutely set to print millionaires by the end of 2025. And I believe this might be one of your last opportunities to really snap it up. This is a stock that I believe everybody's going to wish in just a few short quarters that they bought very heavily. This stock is seeing consistent momentum in both chart and business. This stock is very undervalued compared to its peers, and I'd argue the stock has many catalysts coming in the not so distant future. And before we get into it, the only thing I ask in return for all of the work that goes into making a video like this is that you hit that like button, and also don't forget to subscribe. Every time you do those things, YouTube goes and pushes this video out to more folks, which helps us out tremendously, so we really do appreciate it. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, let's go ahead and get to work. So we need to start with MP Materials. So about a month ago, I made the case that MP Materials, ticker symbol MP, was screaming buy because Trump was mulling using defense powers to fund rare earth projects. And I read you at the time, the Bloomberg article where it said literally MP Materials Corp, the sole domestic producer of rare earths, would be a prime beneficiary, and that Deputy Defense Secretary Steve Feinberg is working to line up funds for the company. And then Secretary of Defense Pete Hegseth said MP Materials is a great example of a place where we can partner with industry. So in other words, they literally told us ahead of time that they were looking to partner with this company in a big way. I made the case to allocate heavily into MP because of this. The backing of the sole rare earth provider in this space by the US government is about as good as it gets. And then this morning we got beautiful news. This morning it came out, quote, Pentagon to become largest shareholder in rare earth miner MP Materials. Oof, don't we love that, folks? Now, obviously, the shares went absolutely parabolic, but take a look at these call options that we alerted. We alerted MP 40 strike calls expiring September 19th, 2025, giving the government backing thesis the entire summer to play out. After we alerted it on a Sunday night, well, it opened at about $1.78 that Monday and then ran to $5.77 at the first cycle highs, and then sold off for a couple of weeks back to base, and then as of this morning hit $9.74 at highs. That's more than a 5x in a little under a month. And this is a great example of how doing the due diligence can really put you ahead of the market. They told us literally that they were going to take aggressive action here, yet markets waited until now to FOMO into the stock. Pretty crazy if you ask me. But anyways, this news is very big outside of just the pump today. From CNBC, quote, MP Materials will build a second magnet manufacturing facility in the US to serve defense and commercial customers with support from the Pentagon. The facility is expected to start commissioning in 2028 and have a rare earth magnet manufacturing capacity of 10,000 metric tons. The Defense Department will ensure that 100% of the magnets produced at the facility, called 10X, are purchased by defense and commercial customers for a decade-long period after the plant is built. So when they're saying defense and commercial customers, you know who they're not saying? They're not saying foreign powers. They don't want any foreign powers buying our rare earth materials here. This company is right now becoming the symbol of the US entering the rare earth space to make sure that we're not only reliant on China. And it's not just the Pentagon. I mean, big banks are coming together. JP Morgan and Goldman Sachs are providing $1 billion to help finance the manufacturing facility. MP Materials also expects to receive an additional $150 million loan from the Pentagon. So what a great day for MP Materials. If you caught this play either with shares or options, let us know in the comment section down below. Now, anyways, what is the bigger picture here moving forward? Well, I'm glad you asked. This Pentagon deal is really huge because it means guaranteed offtake and revenue visibility moving forward. And all this capital means faster scale, better margins, cleaner balance sheet leverage, all things that are critical for commanding premium valuation multiples. The DoD's commitment to purchase 100% of magnets from MP's upcoming 10X facility at a price of $110 per kilogram price floor for the NdPrs, well, that turns what would have been a speculative investment in a speculative facility into a high confidence revenue stream. You do the math here, at a full 10x capacity, that alone could translate into roughly $3.3 billion of annual magnet sales. So pretty much anybody that bought the stock about a month ago when we were talking about it, well, you bought it before they had all these guarantees from the government. You bought it when it was super risky because nobody had the actual confirmations. But now if people want to buy it, they have to pay a much higher price. I think what you're going to see in the coming quarters with this company is that margins are going to expand a lot. The company is going to be able to do a lot better than ever projected. And if the company struggles at all, well, they're just a quick call to Uncle Sam or a quick call to Daddy Goldman Sachs, and their money problems are solved. That said, yes, be free to bask in the win here, but also wait for the stock to take a breather before buying more. In my opinion, once the stock takes a breather, that's when you're going to want to buy farther out expiring options for the next MP move or DCA with shares. Stay tuned in the Discord if you want to get our alerts for when we think it's a good time to buy. And if you're not in the Discord yet, make sure to sign up with that first link down below. Okay, let's move on to SoFi. So SoFi is in quite the bull market right now, finally breaking higher and higher highs. Yesterday, we alerted a round of $22 strike call options expiring January 16th of 2026 to play off this momentum, and they've done well today. But notice how we gave them until January to play out. Why? Well, because SoFi is the fake out king. We've been fans of SoFi for years and called it a buy in almost every market cycle. But the one thing you got to know about SoFi is that its momentum cycles tend to convince lots of people to FOMO in all of a sudden, and then they get blown out. And this has happened over and over again throughout the years. That said, if you look at the overall chart here, we're finally getting some newer and newer, more juicy cycle highs. But that still does not mean we won't get breathing cycles. And so giving the stock 6 months to break deep above the $22 region is fair. Now, Charlie, why exactly is SoFi heating up so well right now? Well, a major reason is the so-called Big Beautiful Bill caps graduate and professional school loans at $100K to $200K with tighter federal limits. More borrowers will seek private refinancing, an evident boost for SoFi's core lending franchise. SoFi also is rolling out new private market funds, giving retail investors access to high-profile startups like OpenAI and SpaceX with minimums as low as $10. They're playing the Robin Hood game here, which is very, very positive. And quite frankly, SoFi is just a very well-managed business. In Q1 of 2025, SoFi delivered a 200% year-over-year increase in adjusted EPS and grew revenue 20%. Membership jumped by 800,000 to 10.9 million, while total products per member rose 35% to 15.9 million. Showing that the company is really good at getting users and then also selling them more and more products, getting them to use more and more products in their ecosystem. SoFi, very, very nice. Lots of beautiful momentum. Be aware of fake outs, give this time. But overall, very nice long-term view. Now, one of the things I love about YouTube and being on YouTube for years now is that you can actually go back and see thousands of my videos and see all of my predictions through the years. And on August 28th, 2023, I made this video about NVIDIA celebrating its new high. And this was shortly after it had first hit the $1 trillion market cap. Keep in mind that this was pre-split prices. NVIDIA did a split, so $500 back then is really $50 today. But anywho, I made the case in that video for the stock to go far higher simply because the underlying demand was going exponential and their tech was outpacing everyone else. But I'll never forget that video, and the reason is because at that point in time, nearly every single comment, and you can go back, it's still up today, almost every single comment was negative. Just as a case study, let me read some of these to you. NVIDIA will drop like a rock. 78 likes. OMG, so overvalued NVIDIA is. That one was spoken in a Yoda tonality, which adds even more emphasis to it, right? Oh boy, you will regret this video in 6 months. Go through the comments, you have many, many more comments like that, and many people saying NVIDIA will never surpass Apple, that NVIDIA can't go over $1 trillion, that $1 trillion is too crazy. However, as of yesterday, NVIDIA, for the first time, hit $4 trillion. $4 trillion. It's gone up about 4 times since I made just that video celebrating the bull market that NVIDIA was in. So what is the point and what is the takeaway here? Well, so many people have too short-term of a mindset. They'll look at any company that's doing hundreds of times better than the nearest competition and exponentially growing, but they'll look at the stock price and they'll say, oh, I can't buy that because it's up. What if I buy it and it crashes 10 to 20% and I look like a fool? So what will they do? Well, they'll decide, I'm not going to buy it. I'm just going to watch it continue to go up. And then when the next apocalypse happens, I'm going to buy the dip. And then usually they wait maybe a year or two. The stock goes up another 2-3x. And then there's some kind of massive apocalypse that takes you back down to maybe 50% of the way to where they avoided buying because it was too expensive. Then they say, oh, I can't buy now. We're in the middle of an apocalypse. What if things get worse? And then the stock goes back to all-time highs. This is why I preach over and over again. The most important thing is that you buy good assets at good prices. It's not that you get it at the cheapest price possible. It's that you buy good assets at good prices. Most people miss out on big upside, not because they don't see that upside coming, but because they were so worried that, oh no, I might have to deal with a small pushback. Oh no, it might not be as cheap as it was 2 weeks ago when I was considering buying it. Or, oh no, there might be a temporary drop before the big gains are made. NVIDIA is one of many, many examples of how trying to time everything perfectly is going to result in you making less money overall and sitting out of some of the biggest runners. How many times when Palantir was in its many sell-off periods did I say, hey, yeah, it's down, but it doesn't matter if it goes down 20 to 30 to 50%, because guess what? Over the next few years, you have a 10x plus of upside. And for folks who bought the dip at $7, $6, $5, well, it was more than 10x. Okay, now main entree. So AMD continues to be one of the most obvious deals in the market to date. We're in the world where top dog NVIDIA is pumping to $4 trillion of market cap, but its runner-up AMD is at a paltry $230 some odd billion. And when you do a little bit of digging here, it becomes very, very obvious in my opinion that AMD has a lot of upside to fill in. AMD hasn't even bested its own all-time highs yet, while the demand in its industry is at way, way higher than all-time highs. Now, a lot of folks don't get the role that AMD plays in an NVIDIA dominated industry. So I'm going to make an analogy here for companies that are choosing between AMD and NVIDIA when it comes to buying chips. The way that I like to think of the AMD situation is, say that you're super hungry and you're deciding to go to a restaurant and there's just a few options to choose from. The biggest and most popular and tastiest is NVIDIA, but the line at NVIDIA is around the block and the price is way too expensive for what you're looking for tonight. And then you have AMD, which also is a very, very solid meal provider, maybe not quite as good as NVIDIA, but will get the job done well, has no wait, and also is significantly cheaper. And then I guess, if you're somebody who's really desperate, you can just go and buy a bean and cheese burrito from Intel, right? So bigger picture here, the thesis for AMD has long been that as long as this industry continues rolling in with crazy amounts of demand and NVIDIA can't service it all, well, AMD is going to get a lot of that overflow. But the thing is that things are now changing. The tides are now turning. AMD's restaurant basically has a new chef with some new menu entrees, and these entrees are quite frankly the same or even better than what NVIDIA offers. If you're analyzing both restaurants and you're eating at both and you're like, okay, wait a second, AMD tastes the same if not better, but it's also faster and cheaper. Well, you put that together and you look at how cheap of a multiple AMD is trading at compared to NVIDIA. You look at the overall trend trajectory, how it's way below its own all-time highs, but heating up, and you start thinking, okay, wait a second, AMD is screaming buy. And that is the bull thesis for AMD in a nutshell. Look, this was a very watered down analogy, and there's a lot of situations where there's so much demand right now that big companies like Meta, Apple, Microsoft, they're just going and putting in bulk orders at both AMD and NVIDIA. But the point is that AMD is a number 2 runner-up player to NVIDIA right now, and arguably in some segments it's going to outperform NVIDIA, yet markets have been refusing to rotate into the stock as much as it deserves while throwing everything at NVIDIA. So anyways, if you agree with AMD, how do you play it? Well, we alerted these $140 strike calls expiring August 15th, 2025 to the Discord members, and they've already more than doubled since then, and the stock has plowed through our $140 strike price. But here's the thing, you can go farther out of the money, like 150 strike and farther out in expiration, say late September, early October, and still have a super solid catch-up play for AMD to get back up to its own all-time highs. I believe that AMD is going to continue to fill in the gap and continue to grow until it trades at valuations that are at least justified for where it sits in the industry, which I believe is much, much higher than the current pricing. And so AMD shares and or AMD call options are a great way to play the move, in my opinion. Let us know what your thoughts are on AMD. What are your favorite plays right now? Let us know in the comment section down below. Make sure to join us in the Discord if you never want to miss one of our alerts in terms of options, in terms of trade ideas, price targets, so on and so forth. And we'll see you in the next one.